I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it. Whew. Hey, I'm Cramer. Welcome to Mad Money. Other people want to make friends. I'm trying to get through Cramerica here. My job is not just to entertain you, but to educate you. So call me at 1-800-743-CNBC. On a day where the market felt a lot like some blood-soaked World War I battlefield, a Verdun or perhaps a Ypres, maybe the first day of the Battle of the Somme. Stocks getting gunned down by machine gun fire left and right. A day where the Dow got pounded, 178 points. S&P plummeted 2.1%. Nasdaq 2.7%. Hey, that's tech, not oil. Not oil derived. My advice? Something simple. I don't want you to be a hero. Don't try to come in and buy this one before the dip is done. Who knows? Colonel Gaddafi could do more damage to the U.S. economy by the time he's done with this insurrection than all of his years as our sworn opponent and terrorist. Yes, Libya has that much oil, and he can hurt us for certain if he starts sabotaging things. I'm not advocating panic, because nobody ever made a dime panicking. But I am saying you got to be realistic. And right now, cool objectivity tells me that things simply aren't as good as they were a month ago. Yet stocks are still up huge from a month ago. Right now, I'm worried that the facts are no longer on the side of the bulls. Not with Libya and Bahrain blowing up and no certainty about the outcome in either country. I am struggling today. I struggled all day today because, as I said since the beginning of the year, the Achilles heel of this market is oil. If it gets too expensive, it gets so the price of gasoline goes over $4 at the pump, then I've been saying we're in real trouble. It was great when oil was at 85. I didn't think we're in trouble. It ain't there anymore. And if we don't get a resolution of the Libyan situation sometime soon, if we don't get something out of Bahrain that takes our worries off the oil production off the table, then we could very well see the price of the pump surge above that unfortunate level. Now, that would be a bad thing. Don't forget how horrible the economy got when we hit that level a few years back. I haven't forgotten. Nobody went out to eat. Nobody did any shopping. Normally, on a terrible, horrible, no good, very bad day like this, you know what I like to do? I like to come out here and tell you to buy the themes that work, the ones that have been terrific for us: energy, extraction, mobile internet tsunami, need for food, and, of course, gold. However, other than gold, which I now like GG, Gold Corp, and that's been consolidating, other than gold, the rest of these stocks in these super hot sectors have been soaring for months. I'm not kidding, months. We've been really right on these themes here. But until now, we've also had the facts on the Cramerican side. It's a lot easier to be bullish when the facts are on your side. And they were with us right through Egypt. But now the facts have started to turn against us. Not enough to turn me into a bear, but certainly enough to make me counsel caution. The market, plain and simple, is too overbought, even after this sell-off. And given that we have such huge profits, have been watching the show, huge profits in these red-hot areas, I think it would be insane to blithely leave them on the table, even if we lost a couple points today, okay? You lose 2%. Hey, that's not so bad. Libya and Bahrain aren't Egypt. They are far more important to oil production and therefore far more important to the day-to-day consumer in this country. Plus, as luck would have it, the grains came down the limit. So the ag, the hottest sector out there, is cooling. Hard to buy the farm equipment stocks. I still like them, though. And everybody thinks there's another Chinese rate hike around the corner in this entirely negative scenario. Entirely. One that is, for lack of a better term, truly ugly. Why don't we give the bears their due? Give them at least a couple more percentage points to the downside. Is that a crime to give it to them? They are simply too many pat but pretty irrefutable negative arguments right now that have a lot more gravitas up here than they did, say, 10% ago. Yeah, I don't think the pain's over. I could be wrong, but I don't think it's over. Other people have such huge gains, they're going to be taking profits left and right. If you can take the pain, the best thing maybe you should do is nothing. Wait for a Libya/Bahrain resolution. If you can take the pain. Some people like Novocaine. Novocaine's doing a little selling. That means do some profit taking. This is one of those moments where discretion is the better part of valor. No need to go all charge of the light brigade, half a league, and buy into this weakness, and I usually tell you to do so. And no reason not to sell some of your biggest gainers, even just because you left the last 2-3% on the table. That's okay. No one ever got hurt ringing the register. So why not just abandon ship entirely? That's what the bears would tell you to do. Why not say something like get out now? Something I infamously wrote in thestreet.com 13 years ago after some relentless declines. A moment I always remembered, like to forget, because the market bottomed about 15 minutes after I posted that blog. You shouldn't sell everything. Even as now is definitely not the time to buy, because things are finally turning in the economy. The real backtrap. The regional Fed reports say the economy is improving, job prospects are getting better, consumer confidence figures were so great, so strong that maybe even $4 gasoline won't crimp it so bad. Japan and Europe are doing better. These are all positives. Can all of these be derailed by sky-high oil prices? Maybe. But if we don't, then you know, look, if things get better, you'll miss a terrific rally, all right? But if you hit the eject button, you'll really be angry and you'll be upset, and I don't want you to do that because I think we can rally once this is over. So what should you do? Playbook's pretty simple. Got to gain a super hot stock, particularly in tech? I'm asking you to take profits. And even if they're down from where you were Friday. These names have nothing to do with Libya, but they'll come under fire anyway because that's how the market works, and you come to me to ask me how the market works. These kinds of stocks never bottom on the first day of a sell-off. They don't bottom on day 2. Day 3, yes, but not day 1. We had day 1 today. Patience. You can buy gold right here tomorrow. Gold stocks aren't up for the year, which is actually one of those anomalies that indicates maybe things aren't all that bad. But let's not take any chances. No reason to be a hero. You buy anything energy or alternative energy that's down right now. I would do that tomorrow. All these stocks will be in favor if this move in oil continues. This is an opportunity you don't want to miss, particularly for the largely domestic producers and their drilling helpers. I would also bet that the decline in the ag space are buying opportunity as higher interest rates around the world have done nothing to deter the global change in eating habits. More meat, which requires more grain. So we got it there, right? Companies that save energy, also heavy equipment makers, quintessential industrials, heavy machinery, aerospace companies, Honeywell, 3M kind of thing, United Technology. These are all classic chart breakouts that unfortunately are very overextended. You simply must believe the profit takers will overwhelm any buyers, including you, perhaps for a couple days and a couple percentage points. Now here's the rub. Everything else, no. Nah, can't buy it. I mean, I looked at the financials this week, and you know I like them. So many of them look like they're going to break out. Now they'll all be repelled. Retail looked like it was going to bust up. No, nothing but trouble. Can't get too excited about any of the consumers of energy, like the papers, the chemicals, the companies, and the packaged goods names, even if they are economic recovery plays, and I told you the economy's recovering. Can't own the traditional defenses for the most part because they're big commodity users. Drug stocks are problematic as well. Witness the DRG. The index was down big today. My biggest worry, higher oil is coming true. Simply can't be as bullish as I was before. I'm sorry, I can't be. The facts change. I got to change too. The bottom line, we have made a ton of money from this rally. If you've watched this show, you know you've made a lot of money, but there are too many negatives to ignore, tiptoe around, or explain away. So you know what? We're tempering our enthusiasm. We're trimming our huge gains. We're waiting for better prices to buy. No need to be a hero. You might just turn out to be a goat. Kim in Massachusetts. Kim.
Hey, Jim. How are you doing?
Okay, Kim. How about you?
Good. In light of BHP and Chesapeake deal today, gas deal, I'm wondering natural gas play and what you might recommend.
Okay. I want to make a point here that Chesapeake should have been up much more. Aubrey McClendon did another incredible thing. He sold his Fayetteville holdings for more than $4 billion. And even though the stock was up, the fact that it was up big in a down day tells me it would have been up even more. I am blessing continued buying of Chesapeake because, as I have said over and over again, Chesapeake's a double from here. CHK is a double. The only problem is that as it goes from 25 to 32, it's no longer the double's getting a little tougher because it's already moved a lot. I'm using a $60 price target. I think Chesapeake goes to 60. Alexis, also in Massachusetts. Alexis.
Booyah, Jim.
Booyah.
Got every boom. Thanks a million for all you do.
Thank you very much. Tough days today, but we got to work it out together, and that's what we're going to do.
That's right. With all the recent M&A on call, BHP, Walker, Alpha Biomassey making a medical powerhouse, pricing power, very strong demand, all-time high prices, $100 oil. Why is the U.S. coal sector selling off about 10% in 2 days?
Look, coal is fabulous, and the company I did the most work on this weekend is one people felt was disappointing because it's a high dollar amount. People don't want to own it. That's a mistake. It's Walter, WLT. I think you use deep in the money calls. If you don't know how to do that, go get a copy of Jim Cramer's Getting Back to Even. DITM, deep in the money calls to play Walter, which is the most attractive coal play right now, even better than Peabody, which have been my favorite. Give the bears their due this time around, okay? Now, there's a lot of uncertainty, the threat of higher gas. Look, I always come out here when I tell you it's right to buy, and I'm not doing it today. I think we get lower prices. Maybe I do it Thursday. May have money. Be right back.